The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 24 November 2023. Well, Thanksgiving is come and gone, and here we are at the end of the week. We've got about another month. Lots of tax loss selling has taken place already, with probably a little bit more to do at the end of the year. Before I forget, I just want to remind everybody at this top header here, important, you can discover how to build and preserve your wealth today absolutely free. Just give us your first name and primary email address. You do that down here. All you do is give us a name and an email. We verify that. The reason I'm bringing this up is that there's a new sales letter, but it's more than a sales letter. It goes through the 3 pillars of legacy wealth, and all that is for free. Spent a lot of time. In fact, I edited it over and over while I was in the hospital. And so it's a free document. Yeah, there's a sales pitch. The sales pitch is that if you sign on to the Morgan Report, you'll get a half-hour one-on-one consultation with myself. And that's after you've signed up. And after you schedule it, we have our conversation. And if after that takes place, you decide the Morgan Report isn't for you, we still give you a 30-day money-back guarantee, which obviously means you could have had the consultation and still not bought the report, and that's okay. I'm offering that. So I thought over what could I do this week. I thought I'd do something a little bit different, and that is what goes on in the precious metals industry. A lot of people are aware that there's corruption everywhere. Corruption everywhere really can be tied to the result of the corruption of the currency. I've said this so many times, I'm kind of tired of saying it. There's a direct correlation with the moral fabric of society and the debasement of the currency. Having said that, the precious metals don't go unscathed. I'm not talking about the precious metals themselves. They do. I'm talking about the people that sell them, store them, buy them, trade them, or market them. This came out yesterday. Trio of precious metals dealers accused of a $185 million scam targeting seniors. The bottom line here is that 1,300 elderly seniors invested $185 million, where they would charge 100% to 300% more than market prices. I've seen this over and over and over again. And this is one of the reasons I wrote the 10 Rules of Silver Investing. What happens is people that have never bought precious metals before, they buy them or get talked into buying them, and they're buying bullion coins, but they're told they're semi-numismatic coins and they have a higher value, and the pitch is pretty well played out. It's, again, been going on for as long as I've been in the metals, and that's since I was 11 years old. So beware. The companies here are outlined. The CFTC came after them. TMTE, Chase Metals, and Barrett Capital were the 3 that were named in this. But I want to stay on this theme a little bit, and that is, some other dealers that have gone out of business, and you might be a little concerned about. Kitco's got a pretty good reputation. I don't want to bash anyone, so I just want to stick to the facts. This comes from About AG's website. Pool metal less than 90% backed. This was a long time ago. Whether that's been corrected at this point or not, I don't know. I am in a Kitco pool account, very small amount. The reason I am there is in case there is an issue, I will be one of those on the mailing list that should be informed. But what this talks about is there's less than 90% backing to a pooled account, and I'll leave it at that. I brought this to everyone's attention that gets these weekly perspectives. This is, a year ago, a little more, year and a month, straight from the CFTC website. This was First State Depository and Argent Asset Group. Both were up against it with the CFTC because they didn't have all the metals that they were supposed to have storage. There were a lot of precious metals IRA that deposited with First State Depository, and it's unfortunate, but this stuff does happen. You've got to be careful, and just a word to the wise. A lot of this stuff you can do pretty easily on your own if you just do a search for precious metals depositories you can trust. This is one that pops up. This is from a company, so realize that. But Delaware Depository, I would certainly vouch for that one. I've known John Potts for years, and I got a complete tour of the complete facility with him from top to bottom years ago. But we went through everything, and then of course the carriers, Brinks, Garda, Loomis, any of those I would consider to be pretty safe or safe. HSBC, JP Morgan, like it or leave it, they do have a lot of silver stored under their auspices for the SLV and also other facilities. Scotia Makata doesn't count anymore. C&T Coins and Things, been around a long time. If you're there, I would consider to be very safe. And there are others. There's some. I'm not too big on depositing in the CFTC controlled, I should say controlled but associated warehouses, but that's your choice. I do think all of them aren't up and up. But also, if there is a confiscation, which I really doubt, but some people are concerned about it, that's probably where they would go. They would go to the ETF silver depositories or the COMEX depositories. That's my opinion. It's shared by many, many others in our field. And so, in other words, you've got your metal there. It's safe. It's accounted for, but that's could be, and I want to emphasize, could be a sitting duck. Is it going to be? I doubt it, but it's something to consider. Having said all that, I still think it's best to have a private vault, one you can trust, and I know a few, and I use one myself. Actually, I use three. And I will be speaking virtually at the Money Show. It's Canada. The topic will be, is the noble metal worth your investment? What's interesting is I've been long platinum for some time, but I've been particularly on a spread trade. Spreads actually use less margin. Long platinum, short palladium, and it's worked out really well. I'm not ready to pull it off just yet, although it's probably getting close. I don't need to get every penny out of the trade. But I looked at one of the updates I saw recently, and gold is at 95% of its all-time high. In other words, another 5% move, it's at its all-time high. Silver is at 47%, so it'd have to double or a little more to get to its all-time high. And platinum and palladium are both around 35%, so they'd have to triple to get to their all-time high. Obviously, they're all undervalued except gold, although I could argue gold is undervalued. The point is it's very close to its all-time high, with the other three white metals are not. Are they in the buying zone? I would say yes. Is this the exact bottom? I don't know. I do think that there's opportunities here, and that's what I'll be discussing in Is the Noble Metal Worth Your Investment? Coming back to what the main focus of this week's perspective was, some of the other dealers that have gone out of business: Bullion Direct, Provident, Elemental, Northwest Territorial Mint, and Tolvi. And there's others, but so you got to be a little bit careful. And that's, again, why I wrote the 10 Rules of Silver Investing. If you haven't seen those, it's free. Just type 10 Rules of Silver Investing. Probably my name, David Morgan. I don't know if you need that or not. I've done the videos on it. I've been interviewed about it. It's posted on multiple websites that deal in the precious metals, and it's on our website somewhere. So it's basically designed to keep you out of trouble. And one of the main points that I make in there is to start small. So you're going to put 10,000 in the metals, $1 million, $2 million, or whatever. Start small. Buy $500 worth. If that's a lot for you, then buy the minimum. Some dealers won't allow you to buy less than 20 silver coins. So that's what, 20 times 25, about $500. Some will. So it'll be worth your time to follow at least that rule, if not others. And once you get everything you're supposed to get, it's in a timely manner, it's packaged correctly, you probably had to sign in for it, then you can up your purchase. Also, of course, I advocate dollar cost averaging. All that's in the 10 Rules of Silver Investing. Now I want to move on to the big picture, and that's the banking problems. So the big picture is something that I've talked about for some time. This was an interview I did with Daniela Cambone when she's with Stansberry Research. As you can see here, it's actually got 2.5 million views. I've been told that's the most views of any of the interview she did on Stansberry. I don't know if that's true or not. What I do know is that it was all about the bail-ins. I was one of the first to bring this to the fore of the investment community. And many have done it. Some probably did it before me. I'm not certain I was the first, but I was one of the first. Regardless, the whole idea is that the money that you deposited in the bank that you think is yours is not. I've said it. Many have said it. It's been said over and over again. One of the best places you can verify that is with David Webb's new book, The Great Taking. It goes into great detail, really great detail on the DTCC. So even your stocks and bonds aren't yours either, believe it or not. You can read the book and verify what I'm saying. So the big problem is if you've got over 250,000, you're at risk. And even if you're under 250,000, you could be. I say could, not would. It depends. What I've said about the Silicon Valley Bank and the other associated banks that went down basically at the same time, and then we've had Citizens Bank here recently, is that the Fed is inconsistent. It's basically illegal to bail out these banks. They're supposed to be bailed in, but that's not what happened with Silicon Valley Bank. A lot of the depositors were really big names of stalwarts in the Silicon Valley and other such people that are associated with that group. So all I'm saying is be careful. The law is very clear. And we, as I said at the very beginning, that this is only the beginning of banking problems, not the end. And I will stick with that statement. So if you are in a position of having over 250,000, then what do? If you watch my friend Mike Maloney's recent update that he did yesterday on Thanksgiving Day, it's about a 45-minute talk, but it's really worth it, and you could kind of skip through it and get the gist of it. But what he's pointing out is on the Schuler Index, housing prices are more overvalued now than they were during the crisis of 2007-8. And he was on the Robert Kiyosaki speaking circuit at the time of the first one and warned many real estate investors of what was to come, and they ought to shift out of housing and into gold and silver. And that was very, very good for the people that paid attention to what Mike had to say. He's now saying it again, and he's pointing out it's a bigger bubble than it was previously. So coming back to the point I want to make is, what do? Well, you don't go into real estate, in my opinion. You don't go into stocks or bonds, in my opinion. Where do you go? And you go to precious metals. But the reason I preface this part of the weekly perspective is that you got to be careful going into precious metals. So a lot of the consultations I've gotten recently basically go something along the lines of, David, I've listened to you for 10 years. I trust you. I've never bought gold before. Who do I buy from? How do I do it? I don't want to get burned. And what can I do? And I've had several of those, and I'll probably get several more. Certainly my consultation fees aren't dirt cheap, but they're well within the ballpark for my expertise and having the knowledge that I do as far as where it is the best to buy it. In fact, people that do consult on that topic usually get lined up with very close to wholesale prices, much better than most of the people that you hear on the internet incessantly, and also a storage facility that's pretty well off the radar, you might say. It's a place that I use personally, so I am somewhat biased, but I've gotten great service and always have. And every member of the paid service of the Morgan Report know of it. I've brought it to their attention many times. So coming back to the new offer, what I'm giving is insights into that on the one-on-one for half an hour if you determine that the Morgan Report is something you'd like to try, and then after our consultation you see the actual report and it's really not for you. As I said, you do get a 30-day money-back guarantee. So that's it for this week. I will be back next week with another weekly perspective. Welcome to the holiday season, colder weather for North Americans, and a very interesting year to come in 2024.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, And you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.